So kind of to find a balance in between, technically, yes, you can trade a little bit with $500,000. Technically, you can open a position. But Scott's not wrong. $5,000 to $10,000. I think what we've talked about before today has been if you want your own account, you need at least, I mean, bare minimum 3 to 5,000 in futures. And if you think about it, if you notice what they give you for drawdown amounts on all these 50K accounts, it's pretty much $2,000 to $3,000. Like that's kind of what you're getting with them as well. It's all you're getting. But so for $100 at Take Profit Trader, because it's still 40% off, you're getting what, $2,000 or $3,000 worth of drawdown to go practice those micros. The only problem is you can't practice that on MT5 per se. So, but still, that's land in the middle. I'd say 3 to 5. 10,000 would be much smarter. But if most of you guys, well, there's a lot of you guys who are using 10,000, but you're not using it in that way. This is not the spreadsheet I had up on my laptop, so it's going to look a little different than what I was doing. But to kind of give you an idea, figure again, if you have a $1,500 account, you're not doing 5% risk because most of the trades are going to be more than that. If you're trading on the 1 minute, probably, but the 2 to 5 minute, you're probably going to be closer to 7 to 10%. It doesn't leave a lot of losses. Notice how this is only set to 65% accuracy. Okay. Figure again, if some of the trades are closing at 0.5, 1, 2, 3, 4, 7, 0.5, 2, 3, 4, 7, you know, and you have -7 on the other times at a 65% accuracy rate, that is insane on 70 trades. Oh, that one's too big to even discuss. That is 7 figures. Hold on, let's redo. Maybe. Better. So 6 figures, okay? Much more practical. Not to say this is the 7-figure thing can't happen, but it's just very, very impractical. So this is literally about a month of trading. 72 trades. Figure taking 2 to 3 trades a day, 4 to 5 days a week. So 3 to 4 trades a day. That's what's possible. It's not easy though. But notice how this is not needing some kind of 90% accuracy or 80% accuracy. Notice how this is only a 2.2. And remember, on a different spreadsheet, figure 1 out of every 10 is going to close at the full 7, okay? Based off of the settings and kind of how I'm setting it right now. That's kind of fugly.
There's another thing to consider in all of this too. You know, the calculations in this spreadsheet, I know because I wrote it, are going to give you percentages of lots as your entry size. It's going to risk 7% because you say you're risking 7%. However, 1 micro might be more than 1% or more than 7% rather, you know, depending on where your stop loss sits. And so it's going to be by how many lots you're doing in whatever you're doing. So there's going to be rounding errors here. So some of these may be bigger or smaller than what you're looking at starting at $1,500.
But if you have good management, so this is kind of what I was testing. I went through over 100 trades just to kind of get something that looked like this. Figure again, 1 out of every 10 is going to hit that full amount, okay? And even then we could say 6, okay? Just to kind of show you, that's fine. 1 out of every 10, 1 out of every 20 is going to actually, you're going to catch that big run, basically. You're going to catch that move that just happened to be perfectly smooth, no retracements, no pullbacks, whatever. That's not that much. The rest of the time you're going to get knocked out somewhere with a 2 to 1, a 1 to 1, a 0.4 to 1, a 1 to 1, a 1 to 1, a 3 to 1, a 2 to 1. But the way this is going to average out is going to be somewhere, you know, averaged out. It doesn't mean you have to achieve this every time. And I'm not factoring in losses because those are already factored in here. Okay. So figure you have 72 trades, of which X amount percentage of them are losses. You have all of these trades. Some of them are really good. Some of them are not so good. They just barely are above break even. Okay. Figure in a month's time, that's about what that looks like. That's possible. And before we think, let's use Scott's error reason for an example, but figure there's error, human error, digital error, all kinds of other errors. There's only 2 ways I would look at this number. Number one, I would look at it minus 20%. Okay. So I'm always factoring an additional 20% based off of any projection, because to me, that's that buffer and it just keeps my mind peaceful. It keeps my expectations in check. So figure 80% of this, still not bad, right? 80% of this, still not bad at all. But with big things like this, I don't even do that. I would say, look, if you fail at this by 90% and you were able to turn $1,500 into, let's just say, $30,000 or $50,000, that is still not a bad month. Okay. Not a bad month at all. The hard part is when you don't see this turning into this, and I think that's why people don't like trading, or they love the idea of trading but don't like the action of it, is because this on week 2, if you're doing really well, is going to look like this. And it's going to feel like you've spun your wheels and you're thinking, well, this isn't even enough to, do anything. It's just not. But I'm completely obsessed with this spreadsheet. So, and that's one account, right? Times 5 accounts once I post them in. Amen, Robert. Yeah, this is one account. So here, if we wanted to put this more on prop firm basis, this is what it would look like. You have a starting balance of 2,000, okay? Remember, you have to get past the buffer anyway, so I really should decrease that, but I'm going to keep it at that. Let's say you're risking about, and this is to kind of tone it down on purpose, 2.5% per trade. Notice I'm not going to put this at 80 because I'm a really good trader. I've got a 5, 7, 10-year track record now that says I can average 80, 90%. But when we're adding in all these technology things, as I stutter that word out, and mirroring things and brokers and Trade Evade went down and Project X happened and this happened or news happened or CPI rolls, just to kind of keep it really down to earth, you're going to average somewhere in that kind of 60% ratio. And that's okay. Like, fine. 60, let's lower that a little bit. Let's do 63% accuracy. Okay. And because you're in a prop firm, there's a lot of psychology going in there because those numbers are a little bit different. But let's just do a 2 to 1. Okay. That's 54. Let's pop this around a little bit and get it as close to 63 as possible. And that's when I'll stop. 10,000. So if you have that set to 5 accounts, and notice I cut that risk in to a third, but times 5 accounts is still 50 grand a month. Again, going off of the 80% principle, now you've still got 35, 40 grand a month. Going off the failure equation to say, hey, look, I can fail at anything by 90%. Like if I can fail at this by 90% and just not blow in the process, you still are walking away with 10 to 15 grand a month, I'd say. Gold's pushing up again. No, you can do higher risk. Like, because that's 25, do 3%. Hoping that again you average that 2.2%. Yeah, that's a huge difference. Huge difference. Gold is pushing up, my friend. This is a Monte Carlo spreadsheet simulation. For anything automated, you wanted to do the 10% of this. For anything ever automated, you're looking for the 10%, view, because all you're doing is turning it down. Like, I kind of want to talk about this. There's another company that's selling their system. It's like a $3,000 to $5,000 buy-in, by the way. And then it's $400 to $500 a month, depending on if you use, which system you're using. Did you guys catch that?
Huh?
$400 to $500 a month, okay? Plus, there's more, okay? You have to have stuff like Pick My Trades or other kind of mirroring systems. And all they're doing is they're promoting that you go for 1% a week. Meaning if you hit that goal, 1% on your prop firm on a Monday. And by the way, when they say 1%, they mean 1% of, and hey, by the way, hold on. Let me pull this up. There it is. So if you have a 50K account times 1%, they're talking about the whole account. They're talking about you stopping trading when you hit $500 a week. Most of you guys are not doing that. But my point is, they're selling this service for $400 or $500. I can already tell you right now, their accuracy is less than the breakout system, way less than JGS well managed, and less than anything else we're looking to release and build and finish out. So I don't know how to tell you guys, no, this stuff is not perfect. Yes, it is possible. Yes, it takes some human tweaking. It takes some human oomph. But just so you know the competition out there, this is what they're promoting. This is what they're doing. Like if it was me and I was using the breakout, I would tell you guys, you're on an apex or something, you're trying to pass that quickly, but everything else, you need 5 days or 7 days anyways to pass it. Or like, what is it? 2 to 5 days in general to pass it, depending on which firm you're using. So that's $500 a day. Fine, for passing purposes, you're going fast. And then after you're past The passing, you're going to turn it down. You're going to have filters on there that allow you to kind of stop trading for the whole week at that point. Say, hey, I've hit X percentage on the week. Doesn't have to be 1%, but just so you guys know, doing that is going to help you maintain. Like once you're funded and you paid the activation fee, particularly with Apex, you don't need to be paying anything else. You don't need to be doing anything else.